If you have a lot of extra capital, you don't know what to do with it, and you want to reinvest it into your land business, what would you start with, Ron?
You want to scale your business, put more money into marketing. You have profits, put more money into marketing.
Next thing I want to talk about is people. We always say start with a VA that's scrubbing your data, listing your properties, applying to emails, things like that is a really good place to start.
I think deal funding would be kind of the next one. Funding other members' deals, funding networking out and partnering on deals.
Let's go to outside land investing.
The thing about putting your money places outside of real estate, it's like you need to put it in places you know.
The last 3 moves or so we've made. Let's just talk about the last 4 moves. Business, real estate, real estate, real estate, business, and I do buy crypto. Hey everyone, welcome back to the Real Estate Investing Podcast. Today's topic, we're talking about reinvesting your profits into other areas. I'm your host, Andrew Apke, joined again by my brother and business partner, Ron Apke. And we want to talk about this because land flipping, land investing, is very profitable. And a lot of people are making a lot of money doing it. And there you have the money problems of, and it's a really, really good problem to have, of now where do you put your money and what do you do with all that excess money? And we're going to break this into 2 categories essentially in this episode. We're going to talk about where to place your money to keep it in your business, land investing, and then places to put it outside land investing and different things that Ron and I have also done. So there's two different pathways. It's in land investing, with different areas we're going to talk about and buying your own deal and things like that. And then there's outside land investing that are just generic and they're what to do with your money if you want to place it outside of this business model as well.
Yeah, I think this is probably something we don't necessarily talk about enough, Dan, is just this, because people are making lots of money and then it can just become a cycle as you're just putting it right back into the next deal. And like you need to eventually, you can definitely put it in your business, which is what we're going to talk about, but it's different than just cycling it into the next deal. Putting it into the next deal is different than into your business.
Right. I actually agree. Oh, it's a combination of both. But let's talk about in land investing first. And if you want to reinvest, if you have a lot of extra capital, you don't know what to do with it, and you want to reinvest it into your land business, there's multiple things you can do. And what would you start with, Ron, in terms of reinvesting money like this? Let's start with some basic things like mail and marketing.
Yeah, I mean, you can, with marketing, you can scale up your marketing. Like that's a way to reinvest your business. Like you want to scale your business, put more money into marketing. You have profits, put more money into marketing. Also, another thing is testing different strategies. You've learned from us, or you've learned whatever, how you're making money in land by marketing some way. Taking 5% of your marketing budget and reinvesting that into some different strategies to test, I think it's like R&D. Like all companies, all these big tech companies, all these companies are doing research and development. That's the same thing with testing different marketing strategies. Yeah. Putting money into that, I think, is huge.
Yeah, testing different marketing strategies, whether it's 10% of your budget, 15% of your budget, whatever you are comfortable with. But it's important because you're going to learn things from it. Not only learn things, some things are going to hit and you're going to have different niches and strategies. Maybe you want to test out, 20% of your mail 1 month going to properties with houses on it that own over 20 acres to try to, and send a custom letter that says, I want to subdivide 5 of your acres off. Yeah. Something like that, 5 of your road frontage acres, and you go and you buy a bunch of 5-acre properties. Different strategies, get creative with it like that. But then you also have texting, you have cold calling services out there, things like that. Cold calling services can be $2,500 a month. That's reinvesting. That's a lot, right? Texting services can be expensive, plus the skip tracing and everything that goes along with it. Whatever you're doing, like putting it into different marketing, that's a big pillar in this business. You got to get leads. So if you're reinvesting in your business, that's the first place I would look to put it, is into getting more qualified leads. Unless you have an influx of them and you don't know what to do with all your leads, 99% of land investors want more acquisitions because that's how we make money. Yep. So that's what you would put it in first. Next thing I want to talk about and staying in the land investing space, Ron, is so we talked about marketing, is people. And that's another area, if you get the right people, that can really, really make you a lot of money. And there's lots of different areas in this business you can go. And we always say start with a VA that's scrubbing your data, listing your properties, replying to emails, things like that. You can pay a little bit more for VAs and they can do some due diligence for you. They can do pricing for you if you want a pricing analyst VA. They can do all kinds of different things for you. But at first, a generic customer service VA who's just going to be scrubbing and doing a bunch of different stuff and you can keep adding to their plate over time is a really good place to start.
Yeah, I mean, people can 10x your business. I don't want to say relatively fast, but getting people to replace some of the roles that you're taking, like you're doing a lot. If you're doing this business yourself, you're making solid money. You're doing a lot of stuff within this business. And it's hard to like reinvest in different marketing strategies if you are doing this all yourself, because you don't have the time, you don't have the mental capacity. But if you can get a VA, you can get whatever it is, you get a person to take some things off your plate, it's going to allow you to grow your business. And that's what you should be focused on if you want to reinvest in the business.
Yeah. And it depends what level you're at in land investing. Maybe you already have VAs, maybe you already have all that. And maybe your next employee is a transaction coordinator or a salesperson, or just an inbound salesperson who's answering the calls instead of Pat Live and then kind of passing them on to you. There's a lot of different ways you can go with hiring in this business in general, but putting your profits into people can really, really 10x your growth, like Ron said. Next pillar, we talked about strategy, we talked about marketing, we talked about employees. What else is there in terms of inland investing?
I think deal funding would be kind of the next one. You have some money funding other members' deals, funding, networking out, and partnering on deals. Like you have some money to put into deals. You can put money in. If you've used deal funding, you can definitely hand select deals for yourself. In terms, if you've used deal funding for your deals in the past and you want to start funding deals yourself, that's a way. But you can also go to members, you can go to other people, and you can try to partner with them on their deals if it makes sense to you. Like that's a way. Thing about it is you have less control when you're doing that, Dan.
Yeah.
And it can bleed a lot of capital very, very fast.
Absolutely. Like you can get, I would go from 1 million to 0 very quick and put it all in there, and it can take all your capital and stress you out, which is good because that money's going to turn if you did your due diligence and stuff as well. The margins are much, much smaller in deal funding. Funding your own deals as well is a really good one. But the last thing I want to talk about too is systems. And you don't need to. It's a small financial investment, systems. It's a bigger time investment.
Yeah.
It's just a time thing. But if you guys don't have good CRMs and systems and processes, because you're going to hire these people are going to come on. And a lot of times the people force you to put good systems in place so they work together, but they're going to come on. They're not going to know how to do stuff. And you tell a transaction coordinator to go do all due diligence. Well, what does she have? Does she have a checklist? Does she have a CRM going through the stages, making sure, putting in all of the information so it's stored in one area? Those type of systems and putting the time and that's an investment, but it's more of a time investment than anything.
Yeah, for sure. And that's a good point. Systems it matters what type of person you are. Sometimes for systems, like sometimes some people are like needed systems. You might already have good systems at this point, but if you're the type of person is always kind of delayed it and you can be more efficient with it, outsourcing it, partnering with on Upwork, whatever it is, and trying to improve those systems, or you can try to do it yourself, is an efficient use of time and money.
Yeah, I agree. And I think those covered a lot of the pillars of inside land investing. Let's go to outside land investing. And there are multiple assets class. Obviously you have, let's just talk about some of the few, like you have real estate, you have stocks, you have buying or starting other businesses. Maybe you have, buying and starting another business in relation to your land investing business, real estate, rental properties, all of that stuff you have there. And that's just kind of a broad level. And we're going to get into kind of the specifics and talk about what we do also. And what we do is not perfect. Of course, it's higher risk than a lot because we're not putting a lot of our money into stocks and 401ks for the most part. We do that, but a lot of our monies are going into real estate or going to other businesses or starting other businesses, acquiring other businesses, things like that as well.
Yeah. I mean, when we're putting our money or when I'm putting my money places, like just what can it be in 5 years? Like stock market is a safe spot. 401k is a safe spot to put your money long-term for sure.
And you should do some of that.
For sure. But it's not helping me hit my goals 5 years from now. I think you'd probably agree with that.
We're more risk averse too.
Huh?
We're more risk
Yeah. It matters your personality too. It matters your age. It matters your situation. Like you don't want to, if you're 50 years old and you're retiring in 5 years, whatever situation, like you probably don't want to do something as risky as us, maybe, whatever it is. But yeah, I mean, we've done a lot of different things. We can get into the details of it. I love putting my money into real estate because it's an asset class that we know really well. Mm-hmm. But again, you're not cash flowing. If you're putting into rental properties, the advantage of real estate is the tax incentives that we see.
Yeah. Well, tax incentives, you do cash flow a little bit and you have the appreciation and you paying it off over time with cash flowing a little bit. The more I invest in things, the more cash flow I want, because being asset rich is one thing and it's cool, but I want to be very, very cash flow rich. And it just gets you to be able to, like, that is the ultimate freedom. Assets behind it are going to come with that too, if you're cash flow rich. And that's what I look at now. And that's just my personal preference. I historically have done a lot of investing on, asset-based things that aren't giving me cash flow. And now I'm starting to look at it a lot different because I understand and Grant Cardone says that all the time, and he always has, and it never stuck with me, and it never really has. But the more I experience not being cash flow rich in certain things that I put a lot of money in, but the asset's there and it's a safe asset, and I know it's good to balance them all and everything, but I like the cash flow of certain businesses. And that's why recently I bought a mobile home, and that's a cash flowing mobile home. And mobile home parks, it's a park, mobile home park. And they do cash flow a lot. Mobile home. That's an asset class that's just going to cash flow a lot. It's going to be a little more maintenance probably, but those generally cash flowing. You start buying 2-4 units, you might get $400 a month, $1,000 a month, whatever it is. But that's really to pay off the asset and have that asset behind it, which is great. And we have a lot of those as well.
Yeah.
But I like to look at a lot of, and it depends. Do you want cash flow or do you want assets? Do you want security? Do you want a little bit of risk and what you want? How much work do you want to put in? How much work do you not? Because if you don't want to put in work and you just want to put it in places, there are real estate syndications. There are partnerships you can get with other land investors or real estate people who need hard money, and you can get 20% a year on your money. There are, I said syndication, there's stocks, obviously. I'm somewhere in the middle. I don't like to put a lot of time into my assets, but I do want some cash flow too.
Yeah. Yeah, I'm somewhat similar, yeah. As far as that, I mean, with where we've put our money the last 24 months or so has been less physical real estate assets for me personally, just because of it takes a lot of energy and work. Like, yeah, the appreciation's nice and all that's nice, but like it does, even if you have a property management company, like whoever is managing it, like it takes a lot of energy and work. If we had a bigger apartment complex, maybe it'd be a little different. But what we've done recently is start and buy businesses. I guess that's kind of the biggest thing that we put our money into. And the combination of building, buying a business, whatever it is, cash flow is essentially going to create the asset. So you have the best really of both worlds. If you are looking for cash flow, it is you buy a business, you build a business, whatever it is.
The most work also.
100%. But the thing about putting your money places outside of real estate is like you need to put it in places you know. Yeah. And that's what we did. Like we know the markets that we've put our money into. We understand there's less risk in things that you know, without a doubt. There's less risk in us building the land portal, putting hundreds of thousands of dollars in the land portal because we know the industry. We have customers. We can provide the data, the service that the customers need. So there's a lot less risk than if any Joe Schmo off the street builds a land data company.
Yeah, I completely agree. Knowing that industry, like even when I was looking at the mobile home park, it was foreign to me, the different things I had to look at, but it was still real estate, and I could figure it out very quickly. And I could figure out the distributions and the interest that they're giving us, and all these different things going on in there fairly easily because it was in the same asset class that we already do.
And you had operator partners for that.
And I had operator partners for that as well. Yes, absolutely. So I'm not managing the mobile home park, which is the biggest thing. And then it does give cash flow and things like that. Like Ron said, we manage our real estate portfolio in Cincinnati. We do have property managers, but there's no other operator or anything there. It's us. And that takes more time and also isn't that great. It's good long-term money when you look at it in 5 years for sure, but it's a lot of time and stuff. If I took that money and put it into my own businesses and things like that, it's different, but that's just how we roll. So the last 3 moves or so we've made, let's just talk about the last 4 moves. So I bought the mobile home park. I bought a piece of land for a member, for Mike. That was a big investment, like funding, outside of that, deal funding. So I was funding. So I bought a mobile home park. I bought that. We started the land portal. That was $300,000, right?
About, yeah.
Land portal. What else? There's we bought Grant County. We bought a Northern Kentucky property.
Yeah,
that was a while ago though. I bought a piece of real estate in Florida. And then we just brought Donors.io.
Yeah.
Yeah. So that we just got out of auction yesterday and brought Donors.io. We haven't closed on it yet, so we won't talk about that too much. But those are our last moves. So business, real estate, business, and I do buy crypto. I like crypto.
Yeah.
I have a lot of crypto, and that's just it's only Bitcoin and Ethereum, and those are the only two I'm really buying. And I don't know much about it, but it's just fun, and I have a lot of money in there. But those are my main moves right there, just personally. And I'm not like, we are not perfect at this. We know we're high risk and all of that. But if you do look at my asset class right now, a lot of it is real estate. But it's more balanced than you think, and we have a lot of cash and stuff like that also. And we do a 401k.
Even the best investors in the world, though, like they all say, like the actual best, not the people who talk the most or have the most people listening. Like they always say, I think Warren Buffett said, like there's the risk is only associated with how much you know about the business. Like Warren Buffett doesn't see risk in buying a business because he knows how to, like he knows what he's investing in. He understands it. The best entrepreneurs don't see risk in building a business because there's less risk in building a business than there is for a lot of other things they could do.
All of these things I just talked about, I know they're going to work.
100%. Yeah.
I'd be shocked if one of those didn't work out.
Yeah, and that's five things. Like
besides
you got
crypto.
Yeah.
Crypto's the one where it's like, okay, that's kind of a top. But for the most part, like all of those businesses we started, we acquired, we put it into the land, all that. Like I know what it's going to get me for the most part. Like I don't know how high it's going to go, but I know it's going to go higher.
Yeah. And the thing about land, like if you guys are making money on land, ready to invest in other things, the thing about land is that it can provide you so much time. Like you can be making $300,000, $400,000, $500,000 a year, working 10, 15 hours, and you have time to do other things. You have money to do other things. So like just figuring out, and it's looking in like, do you want to reduce taxes? Okay, probably buy some real estate. Probably buy some physical real estate.
You should be doing that if you're a full-time land investor.
For sure. Yeah. So you can get tons of tax incentives for buying that. Talk to your tax advisor on that.
It's bonus depreciation. You can balance out your income so much from bonus depreciation that you won't pay
any taxes.
Income tax because of the depreciation of the calculated depreciation of the asset. But talk to your accountant, obviously. But that's the number one strategy to eliminate taxes.
Yeah, you make money and then you put it into an asset that's growing that hopefully cash flows, and you also pay no taxes on it, on the money you made through that entire year. So like that's the number one thing. And then just kind of evaluating where you are, the risks you want to do. Some things are more risky. Like there's not no risk in us buying businesses, but same time, like the confidence and the customer base and the understanding of the market for sure just reduces it tremendously.
The risk is time, and we have an operator on this. And I would not have bought that business if we didn't have an operator, because we're so focused on the land portal right now and everything else we have going on. We already have a software site. We just bought another software site, but we have an operator. That risk would have probably not been worth it if we didn't have an operator in place.
Yeah.
So it's all about your time, what you want to put in. Every asset that I look at purchasing, the first thing I think of is time, and then the reward and the balance between the two.
Yeah.
Like if it's going to make me $1 million a year, I can put a little more time into it. If it's going to, and I can be willing, that's a sacrifice I might be willing to take. If it's going to make $10,000 a year, and then it's whatever, and it's going to take my time too, and I got to go and whatever it is and hire contractors, things, I'm probably not willing to make that. But if someone's there as an operator and wants to partner with me or get some equity and give them 20% to do it, and I pay for it, like you can always work things out.
Mm-hmm. Exactly. Well, I don't have any more to add. Yeah, like, evaluate your portfolio, make decisions based on that. If you're a full-time land investor, buy some real estate. That's definitely something you should be doing. And then grow your business. Like, don't forget about growing your land business.
That's the first place to look.
Because that's working. It's working.
You will make the mistake if you don't put this money in your land business first. It's a heavy, heavy mistake. And you got to where you are now, and you're making money because you have a skill. If you don't put it in the fuel in the fire, like it's like putting gasoline on a fire, because that's the skill, and the money coming in is just backing that up, and everything grows together from that. Like you have to put it in your business first, because that's going to work, and it is working. That is your skill, and you built that. So always fuel that fire first. I'm saying when you have excess and you start to go, don't look at investing elsewhere until you're to that point.
Yeah, for sure. Other than that, guys, if you guys enjoyed this episode, if you're listening on Apple or Spotify, share this with a friend. Put it on your Instagram story. Put it on your Snapchat story. Share it with a friend. It really helps us. If you're watching on YouTube, hit that subscribe button. Hit that like button. Leave us a comment if you have any other videos, any other episodes you want us to talk about. Other than that, thank you so much. We'll see you next time.
Thanks, guys. As always, thank you for joining. Please do us a huge favor and like and subscribe our YouTube channel and share this with a friend. It really means the world to Ron and I, but more importantly, it could help change the life of someone else. Thanks for joining, and we'll see you next episode.